Hey guys, welcome back. In today's video, we are talking about how market makers are about to lose everything, the SEC talking about GME, the AMC fractional shares, and many more in this video. First, we take a look at this. They're trying their hardest to suppress AMC, but all you got to do is look at GME and you see the answer. A lot of market makers are about to lose everything. So in this video, we'll be looking at both AMC and GME. Now, one thing that we've talked about on this channel for the longest time is understanding the short sellers are mutual in terms of shorting both AMC and GME. Now, I'm not going to bore you with the whole long details, but essentially understanding that when one stock squeezes, the other will squeeze along with it because they're obviously not able to take the margin from one stock squeezing. And so this is why we've always seen how both AMC and GME are kind of following the same movements because the algorithm works in both stocks. They're used to suppress both stocks, but you can understand, what is happening when you take a look at either one or the other. Now, to take a look in terms of how impactful this is, you can see here, SEC Chair Gensler to depart agency on January 20th. Now, in this article, what they said was how Chair Gensler began his tenure at April 17, 2021, in the immediate aftermath of the GameStop market event. He led the agency through a robust rulemaking agenda to enhance efficiency, resilience, and integrity in the US capital market. He also oversaw high-impact enforcement cases to hold wrongdoers accountable and return billions to harmed investors. So what I want to talk about here is firstly, how they're recognizing the GameStop market event. Now, this is, again, a fine official in terms of notice to talk about how impactful this whole situation truly is and was at the time. Now, obviously, they continue to say return billions to harmed investors, but at the end of the day, we know that GameStop, AMC, these are the stocks that he needs to be looking into. And the very fact that SEC is mentioning this shows that they understand how impactful it is, but clearly they haven't done anything to it. But it's as we're seeing that Gary Gensler is about to depart, we're seeing more and more things happening. The first, take a look at this. I didn't realize that the stock market trades shares in 13 decimal places. What is that 1 quintillionth of a share? They're trying really hard to pin AMC. Now, again, at the start of the video, we're talking about how they're trying to suppress AMC. And we talked about how they just completely ignore the AMC and GME situation at SEC. And you can see here how they're suppressing it. And we can see AMC large volume, we're looking at 2,263.3333. Again, the list goes on. And this isn't it, because if we take a look at this, the same exact number with GME not fishy at all, where GME large volume falling 6,262.333. Again, not going to say the whole thing, but you can obviously see what is happening here. And the fact it's happening to both AMC and GME. Now, I'm curious do you guys also see the very same? Do you guys see it on other stocks as well? But the very fact we're seeing this, and from what we've talked about, again, from how they're trying to suppress AMC, how the SEC acknowledges what event that the GameStop market event was, and the very fact that we're seeing this thing still happening, yet there is no word about it, shows that clearly they don't care. Clearly, they're not trying to protect the retail investors. And this goes on further to say that this is starting to happen recently. We didn't actually see this happening before, but the fact that we're right now seeing the departure of Gary Gensler, remember, this is at January 20th, so he's still obviously the chair of SEC right now. But as we go further into it, as we're seeing closer to the date of his departure, we're going to be seeing more suppression because what was once allowed by the SEC, or at least overlooked by the SEC, is going to be phased. Now, this isn't a definite. This isn't saying that the new chair will do something because we never know at the end of the day. What we do have is understanding that it's obviously Trump who dislikes short sellers, Elon Musk who dislikes short sellers. So the likelihood of getting the new chair of SEC to also dislike short sellers could be something that is very, very possible. And so it's understanding that the shorts realize this as well, and that's why they're trying to suppress AMC. And again, this is what we talked about in terms of understanding that the price we're seeing right now clearly does not reflect, because you can see from Vaughn here, I'm impatiently waiting for my broker to confirm a cash transfer of roughly $7,000 from one of my bank accounts. When that happens, I will add to my weekly haul of AMC, no problemo. Now, this is another thing that we've always highlighted, and it's essentially understanding just how powerful the retail investors are, especially for both AMC and GME. Now, in this case, I'll be talking about AMC because this is what predominantly this channel covers, but there are multiple people, even people who are reaching out to me, who are constantly showing me that they are buying into AMC. Now, this is not financial advice, so do take a grain of salt, make sure to do your own due diligence and research. This is not me telling you that you should continuously buying AMC, but what this is me seeing that there are a constant volume, a constant surge of people who are consistently buying into AMC, who are more importantly not selling to AMC shares. So they are not giving up their real shares to the market. And what they're doing as well is that they're forcing the short sellers to create even more synthetics as they are buying them up. Now, is there a worry that you're buying synthetics? And we've talked about this in the past before. Essentially, at the end of the day, when they cover, they'll have to cover the synthetics as well. And the more synthetics they cover, essentially the higher the squeeze price will be. And that's what this is doing. Like I said, this is not me a call for you guys to obviously buy AMC shares, do your own due diligence, but it's understanding that we are in a community with people who are constantly buying this share. So this reflects to, why this is a strong company. And it also shows us that the price is not a true reflection of the value of AMC. Now, to talk about GME now in this case, and we just talked about, in terms of dimension of GME, we've also talked about, take a look at GME and what it's doing against AMC. But what you can see here, that the GME net premium have hit a new 3-day high, with GameStop now reaching above $28, a 1-month high. Call buyers have stepped in heavily last few days. Higher strike premiums are $30 and $40 calls. Now, just like we talked about before, when we do see the call options go up, when we do see the premiums go up, what we're obviously seeing is the volume increasing. What we're seeing is the sentiment for GME to increase. Now, we've talked about this in the past. As we see more and more call options happening, we are likely to be seeing a gamma squeeze. And that's exactly what we want. Now, a gamma squeeze won't take GME's price as high as a short squeeze will. But what we've talked about in the past is when we do see a gamma squeeze that is high enough, what it will do is trigger multiple margin calls for multiple short sellers, and that will lead to a short squeeze. And so as we're seeing the options go higher, what we're very likely looking at is the possibility, of course, of a gamma squeeze. And another proof, further proof, our price is without a doubt fake. Now, we just talked about how the current AMC does not reflect the price as we're seeing more and more people buying. This should be a very good indication, because what we're seeing is sure wish AMC was in the movie business. And when we take a look, IMAX and Cinemark. So you can see the year to date in terms of how IMAX and Cinemark is doing. So IMAX up 64.55% year to date, and Cinemark Holdings up 135.32% year to date. Now, this is a reflection of what the movie industry is doing. It's showing what the companies in the theater industry is experiencing as we're seeing the box office recover, improve, and obviously go even higher. And so what we should be seeing is the same for AMC. Now, ask yourself this: why isn't AMC benefiting from this? Why is AMC's, in terms of year to date, not the same as IMAX and Cinemark, which, by the way, are all majority owned by institutions, with Cinemark at an astounding 120% institutional ownership. And when you truly dive deep into this, you understand what is happening. This is something that we've covered multiple times in the past. Again, I don't want to kind of make you guys biased. Just take it how you will. When you take a look at this, it's very simple. And again, I think everyone should have an answer to what is happening. But this is an indication that we are in a thriving industry. But it's also an indication, of course, like we said, in terms of what is happening. Now, furthermore, let's take a look at this. So we just talked about how short sellers are struggling. You can even take a look at a further look in terms of how short sellers are struggling. As we're saying, Ken Griffin says he's open to selling minority stake in Citadel. So this is interesting because Citadel is proclaiming that they're, of course, making record profits. They're making tens of billions of dollars per year. They're making very good investment. And what we're seeing, though, however, is when you take a look at their financials, what you're seeing is that actually, whilst they're saying that their capital is doing fine, you can actually see their capital going down. What you can see is the short positions increasing and that they're taking up more loans. And now they're saying that they're willing to be selling minority stake. Normally, you would sell a stake in your company if you wanted to raise capital. And so if they're in a position where they're doing very well, and that means that they should have the capital, why are they taking up loans, and why are they, again, in this case, selling a minority stake, which for the purpose, of course, is to raise capital. And this is what we talked about. Shorts are in a position where they're struggling for money. And it's at any point when we see whether it's AMC going up, whether it's GME going up from, what we talked about, the gamma squeeze and many more, we can be seeing the margin calls happening. And it's why we said it's game over for these market makers. It's game over for these shorts, because we have seen multiple times why they are in a bad position. And you can see, I'm seeing Kenny G say he may sell a portion of Citadel to bring in the capital infusion. Recently, Bitcoin has gone bananas. these two things are probably unrelated. He wouldn't be short Bitcoin, would he? So what we've seen is obviously Bitcoin reaching $98,000 as of the all-time high now. And what we could be seeing is that if Citadel, like we talked about, increasing their short positions and they're suffering from short Bitcoin short, or they're suffering, like we talked about, the continuous creation of AMC synthetics and GME synthetics, then it wouldn't make sense to why they need this money. And you guys, thanks for watching. I'll catch you guys next time.